makes sense. I don't like eating elephants.
Yeah,
I
it's
can
not.
say that I've never had elephant.
I'll pass.
That'd be a lot of meat.
I don't like eating it. It would be a lot. It would terribly a lot.
Elephant stew for years. I mean, one big cow lasts a whole year for a family of 4.
Yeah. Sam, you ever bought a whole side of beef or a whole beef?
I raise beef, man.
Do you? I didn't know that.
Yeah.
So,
Beef man.
Yes, sir. I'm the beef man.
I mean, I totally would. We had when I was a kid, my parents did. They raised a beef. They named it Come Along because that's what it took my dad to get it out of the trailer. And my sister was super upset that we were eating Come Along, and I was all like, he's tasty. So, a little bit of a lunatic growing up, I know.
Ours are arguably worse. The boys name them every year, even the calves. And so we have burnt hot dog, taco, and brisket right now.
I love that. That's it desensitized. Now, if you're vegan and you don't care for this conversation, I apologize, but the majority of the world eats meat in some facet. Some animals are holier than that, but it's okay. And desensitizing kids to the fact that you are in fact eating an animal. Yeah, like my youngest loves hamburgers and was shook to find out that hamburgers were cow meat. Like, just it ruined his whole day. And now he says cows are tasty. So
Yeah, my oldest brother's never been able to eat rabbits since he had rabbits as a kid and watched them be slaughtered. That was the end. He can't eat rabbit.
I grew up hunting and fishing and like doing it yourself, and it's almost ceremonial.
I used to be like that with deer.
Yeah.
Yeah, it started for us. So her sister was vegan for like 2.5 years and had showed us a bunch of videos and showed the boys videos, and so they were kind of like, I don't know, they saw a bunch of animal factories, and those videos are not fun to watch. I mean, if the like meat process, commercial meat process is pretty sad. Like they don't really have much of a life. They are bred specifically for the amount of weight and production they give off. And so we decided, hey, we don't want to be vegan. I think that like meat is an important part of your diet. But we wanted to raise sustainable and also let them have an awesome life. So they've got 20 acres they can roam around on without any tether or anything, just a fence line. And they got plenty of water and friends and all the green grass they can eat. And they have a really good life. So feel a lot better about that.
I missed the intro. What animal is this, Sam?
This is cows, Black Angus.
Oh, wait.
Yeah, I heard.
I should have said gerbils. Dang it. I missed a great opportunity there.
Are you going to slaughter them?
We have for the past 3 years. We Borthwick Family Farms got founded beginning of this year. I started off just growing it or sort of raising it ourselves, and then friends and family started buying it. And actually, Dan, I owe you some steaks. I'm pretty sure. I promised that once upon a time.
I thought you were just going to let them live there, be pets.
I mean,
we'll run some wellness retreats up there.
Yeah.
We'll love on cows.
You could tell Christina's a vegan.
Well, I'm more pescatarian now, but
Yeah, you're pesky, all right. I mean,
listen.
You could do cow yoga.
See? Although I don't know if you want them
step on my
standing
back.
on your back. Yeah.
Slaughter therapy.
Well, now you're gonna have to get goats, Sam. That's all there is to it.
We have goats. I'll send you a picture later.
Oh, here we go. Okay.
They're terrible though. The goats are honestly the worst. They're the two.
I don't know why people
sisters.
do goat yoga. They have them poop all over them unless they wear diapers.
Oh yeah, no, they just the goats are weird because they're two pygmy goats, so they're really small. They're the size of like a 25-pound dog. So they're probably 25-pound goat. But when they get out, and I've made their pasture like Fort Knox, I've secured that thing so many times. But when they get out, they only go after high value stuff. I don't know why, I don't know how, but they'll go after like anything my wife plants around the house, any of our fruit trees. They won't go after grass. It's just high value targets only. And it's just
It's the goat version of me.
I just had about 10 goats trying to eat my clothes yesterday. Fun times. Fun
Were
times.
you at Goat Yoga, Trey?
No, we went to that capybara farm in Marana, and
Oh,
they have a bunch of goats and capybaras. Yeah, yeah, a bunch of stuff.
there's a guy. I think he's in. Where is he? I think he might be in Phoenix. I see somewhere in that outlying area, but he has like I forget what he calls it. It's basically his excavating company or a land clearing company that he only uses goats.
Yeah, no, I have friends that own a bunch of land and it's a legit business. You can rent goats to come out and like clear off your land.
It's pretty hilarious. But man, what a great way to make money, right?
Twin grazers,
Yeah.
landscaping with team goats. I think it's fantastic. It really is. There's a lot of value here. Animals have their place in this world. What a weird start to Finance Friday.
I was gonna say this is why I joined these calls because of this stuff.
You know what? This is life though. We get to learn and talk and explore different elements. Some of you are like, "Oh man, Sam's a nutbag," and others are like, "I understand. I get it."
I was
If
going to
had
say, I
20
just
acres
walked
and a
in.
mill,
I
I'd
just
do it.
walked into a goat conversation. Like, what's going on here?
You missed
Yeah,
the
you sure
cow.
did.
Welcome to Goat Fridays, Maggie.
Yeah, we've been talking about LeBron.
Wow. Just
There
wow.
we go. I like it. I like it.
Yeah, two
Actually,
people
my
got-
water bottle does say goat on it.
my water bottle says rock solid real estate, and there's a little tiny moose hidden in there. You guys can't tell. It's right there.
Oh, the mooser.
Nice.
Not a real moose, Christy. His dog's name is Moose.
Yeah, no, I'm not having a pet moose in my house. Those things are vicious.
They are so nasty.
Speaking of nasty, let's hear your great wins, your celebrations, something you're just dang proud of.
Me and Christy went to a freaking $3.5 million broker open yesterday.
Was it sweet?
It was super sweet when we had some chitty chats with other agents and networked and talked some AI and what other folks are doing out there.
Anything you can share with us?
That we're pretty much better than any other brokerage in town and further ahead with our use of AI and understanding of different platforms. But yeah,
I may have fallen down a 6-hour rabbit hole yesterday, but
yeah, he was like, I was talking to Brandon, the broker over at Epic, and he was like, we were talking about AI and he was like, how much time does it save you, right? And I was like, well, I'll be honest with you right now, none, because I'm spending more time understanding it and building the initial stuff. But once it's done, oh yeah, for sure.
Just make sure you log all that time on your time log.
know where you're spending your time.
Oh yeah. Note to self, get time log.
I got a buyer and a new listing appointment this week.
Yeah.
Nice job.
I went under contract last night at 11:45 p.m.
Yeah,
Oh,
you
yeah.
did.
So when does your due diligence start? Pop quiz.
16 minutes later.
Sorry, you got cut off.
Oh, I
was
said,
kidding.
when does your due diligence start? I've been running into this lately with agents.
Really?
Yeah.
Your due diligence should be from the very beginning.
Oh, 16
What?
minutes later.
What makes the very beginning? Yeah, Dan's. So you went
From the
under
very-
contract at 6 a.m. yesterday. When does due diligence start?
I don't know, because I always
Is it-
I always say before you go under contract.
Starts today, right? Your first day?
Yeah, but which day is the first day?
Today.
Friday.
For me, it's today.
Oh, today. Yeah, today's Friday. I keep thinking today's Saturday. No, you're right. Friday. It was yesterday.
Finance Fridays on a Saturday.
Listen. This explains a lot about me. Come on, people.
I was like, wait, I feel like I'm right, but I don't.
No, Trey. It's the goats. Just don't pay attention to it. Yeah, it's the day after the day you go under contract. And I've had like 2 agents in the last couple weeks hit me with an email and go, hey, so are you guys getting your due diligence in today? It's due. And I'm like, 100% it's not till tomorrow, but thank you for checking.
Thanks for your concern.
Yep.
Thank you for your professional concern. At this point, no. However, if you're late, it sucks.
Yeah.
All right, more wins. Come on with it.
I don't know if this is really a win, Dan, but I just wanted to share this. The one I told you I might get my 5th one in escrow at the same time. It did not go through. It just didn't go through. We sent an offer and they responded with like just a sassy response. They want $1 under the asking price.
Wow.
I was like, okay.
Oh wow.
And my client, man, when he seen that, he was like, fuck them, they could shove it up their ass. Fuck
Was
that
this
house.
salty?
Wow.
Yeah, it was salty.
Trey, was this the deal that you're doing with Salty?
Yeah,
Oh, fuck.
Were you your seller side or buyer side?
buyer side.
Okay. So what was your
How
initial
does that person even exist?
My initial offer was 170 on a house that's listed at 190. He's paying all cash. It's been listed for 270 days. And he was willing to go up. Like I said, he's an all cash buyer. He has the money, but he wanted to start there. So we talked about it, and that's where he wanted to start. But yeah.
What is their issue?
I don't know.
They just hate Keller Williams or maybe Team Integrity.
Maybe they just hate life.
No, it's
Or
definitely
that.
not team integrity. I can tell you it's a little more broad than that. But that's a good lesson there, Be careful on your counters because you can inevitably I bet that if they came down to like 190, or sorry, they're at 190, if they come to like 80, 185, 180, the buyer they ball.
I talked to my client. He was like, "Hey, man, I'm willing to go up to like around 183 to 185." And I think that would have been more than fair. But yeah.
So did you go back to them and say that?
No. My after he seen that, he wanted no parts.
Done.
Like, yeah, he was done. Like he didn't. I tried to talk to him, but I kind of understood. Like I wasn't even gonna like. I think that's kind of my win. Like I feel like a few months ago I would have like really been stressing about that, but like I understand him and I get it. I don't really have like commission breath right now. Like I understood his point, and I was feeling the same way as soon as I seen it.
Yeah.
That's good.
I have a question for Sam whenever we're done with wins.
We can be done whenever we need to. I heard the other day that Sam, this is for you. People really enjoy our Friday conversations. They learn a lot and they're excited to have these every week and talk more about investment strategies and finding money and stuff like that. So
I love it.
thanks
Nice.
for showing up, bud.
Absolutely. Thanks for having me. All right.
All
What's
right,
your question?
Christina, what's your question?
So I have a seller
No.
coming up. Yep, thought so. Thank you,
No.
everyone. Have a
Okay.
great day. So I have a listing coming up that they're military, and so during our phone consult initially, I said, "So you've got this on a VA loan?" And he goes, "No, I have it on a God, what do you call it? An all-in-one." I think is what he called it. Do you know? Is that a thing? Do you know what that is?
Well, there's a couple. It's a portfolio product. There's a couple of different types of all-in-ones. There's an all-in-one that's a HELOC and a first lien, and there's an all-in-one that's a construction loan that gets wrapped into a fixed long-term purchase.
Well, I don't think it'd be a construction loan because it's in Gladden Farms, which is one of our master plan communities. So it's like a newer-ish house. It was built in 2017.
Okay. So it's probably the
Um,
first and second combined.
So it's a HELOC?
I asked him
So-
I said something about a HELOC and he said no. His brother's a lender out of somewhere else. And so he's like, it was just the thing that made the most sense for us, the way we have it set up. It was the first time I'd heard anything
Do
about,
you know who his brother's with?
no idea.
I mean, there is so the all-in-one is it is a 30-year HELOC. The way that they work is so it's like kind of like a first and a second, but instead of you using your normal bank account and putting money in there and then paying your mortgage, you essentially pay you have your checks directly deposited into your HELOC and then you withdraw money out of it like you would use your checking. It's a weird way to do it. if you do it correctly and you have an excess in like cash at the end of the month, which if someone was doing it, I think if someone was doing it correctly, they could qualify like they are qualifying a VA client, look at the residual income. As long as they hit that residual income, sorry, I'm thinking out loud as to why someone would do it all in one. But
Yeah, I
we-
was curious too, because it was like,
you basically pay interest on your average daily balance. So for someone who is like, I have a friend of mine that utilizes these on his VRBOs. And the reason he does this is at the end of the month, he usually has a cash surplus that's like 300% of what his mortgage payment is. So that is applying towards his principal balance, and then he can pull money out as a draw, if you were. But what ends up happening is you pay significantly less in interest overall, as long as you can kind of maintain that momentum. So for a normal person who's just getting like a paycheck, regular income, they don't make a whole lot of sense because it is a HELOC, and you pay interest on your average daily balance. So they can cost a lot more than just doing a normal fixed 30-year.
yeah, I was curious about that because, like I said, it seemed like I just didn't see the need for any type of like, I don't know if you would consider this non-traditional, but it's like he's in the military, so that's his source of income. His wife has a job also, but and the house is like they bought it in. They did put a pool in, so I don't know if maybe they used the funds. Like, is that an option that if they had wanted to put the pool in, they could have accessed some capital through that?
Yeah. Yep. That's generally how we see this deployed, is like either a rehab or some sort of construction.
So because there's one builder in town, Pulte is the only builder in town that will finance into the deal a pool. It's the only one that'll let you do it. Is that what they're doing, or is that some other different type of deal?
No, they're probably just do they have their own like in-house lender?
Yeah, and you have to put up like 50% of it, and
Yeah.
then you're financing the rest of it with the mortgage.
Yeah, so they're just baking into the overall like purchase price and cost of the loan or revenue in the loan.
So when they're doing an appraisal on that for someone, they're appraising it as if it already has a pool, even though the pool's not done.
Without looking at the individual deal, it's hard to tell, but in a lot of cases, like similar to how you would do like a HUD workup, where you're showing like, hey, here's what we're going to be doing to the house. They can look at that and look at comparables as if the house had all the features you have listed on there. So they could. I mean, that's probably the most realistic way to go about that. Yeah.
Yeah, I was just curious. It's like there's always new things. Christy, I feel like Christy should chime in on this, but we were just exploring for one of her potential buyers. She's got someone that's Native American, and so we were looking at the 184 that we just learned is applicable to all of Arizona.
Yeah. Yep. Yeah, the 184 is an interesting loan because it allows you to secure FHA financing, but you have significantly cheaper mortgage insurance, which typically that's like the downside of the FHA loan is you have non-cancelable mortgage insurance that is significantly higher than it would be on a conventional loan, and then it just never cancels.
Well,
So
there
the
was no mortgage insurance.
you still have mortgage insurance. It's so the way they do it is FHA has two different types. They have upfront, and then they have the can't think of the name right now. They have an upfront amount, like a funding fee, and then they have the normal monthly amount, and they waive either the upfront or the normal monthly amount, just depending on the lender and their specific criteria with qualification.
And so I'm just trying, is there, I guess, let me ask the group, like when you guys is anyone even really talking about this, or are you guys just leaving it all up to your lender partners to explore like different options or get information at your like preliminary meetings and consults? Because like in this case, like for military, right? I'm always asking, is anyone military, prior service military? Do you have any VA benefits that you know of? Like in this case, seems like Christy just happened to know that they were Native American, but if you didn't know that, is that a question that lenders ask, Sam? Like, are you guys digging into all the different options in that way with clients?
With that one specifically, it's super weird because we have to be careful with what we collect as far as HMDA data.
I was gonna say, yeah.
Like there are specific questions we can ask, but asking that question worded incorrectly can get you in trouble. So we have to like there's found information versus given information, and we have to be careful with which, where that information comes from. So typically there's a few different things like we'll ask that would give us the answer without directly asking it. But we can't outright ask them if they are Native American or if they belong to a tribe or something like that.
What is your favorite rain dance?
Yeah, definitely not that.
You could get an answer from people that have absolutely no affiliation that could go sideways.
Can you
so
just
fast.
have them? Can you just have them fill out a questionnaire, Sam, and be like, "Here's a form for you to fill out, so I can better understand your needs, or like better understand how I can help you," without
So
directly asking them that.
funny story, but there was a lender in Seattle that had like an intake form. They're not around anymore, but they had an intake form that it was in order for them to like have a better client relationship with their client. And some of the questions on there, they were basically, so Seattle is it's like the new San Francisco. It's very
Woke?
gay. No, I'm woke. I'll say very gay. Like a lot of same-sex couples and affiliation and whatnot. Nothing wrong with that. But they had a questionnaire that was basically asking people questions if they were or not, in order to kind of better serve them to understand if they were. They got shut down because that's very intrusive and not something that really matters for a loan application. So you got to be careful with stuff like that, with like what you're asking a client. It's given versus found information. So if some person offers it and says like, hey, my wife and I, or my husband and I, that's something different. But if you were to ask them, are you gay or something like that, you can get.
Yeah, that's wild.
So,
I was
yeah.
just thinking if you could ask, like, are you aware of whether you qualify for any veteran benefits, tribal benefits, or anything like similar to that?
Yeah.
Like if
So
they qualify for it.
For me, kind of how I do my consults is I will get the base qualification. So, credit, income, debts, kind of look at that together, and then I'll have like a whole list of options. And even if you look like Dan, I'm still going to talk to you about, like, if you qualify for FHA, I'll still talk to you about the 184 loan, about that being an option. I'll say, hey, the 184 loan is for, tribal members. You have to be within a certain proximity of your reservation or tribe. And then if they're like, oh yeah, that's me, and I'm like, oh, perfect. Yeah, actually, let's go into that and figure out how we qualify. So there is ways to offer information and have someone offer an answer back without intrusively asking them directly, are they Native?
And then just to dig into this, because again, it's like a new thing for me, is that in order to qualify for that, like for military, they're providing supporting documentation, their certificate of eligibility, all of that. What is it if you are Native American? What are you providing?
Yeah, typically they have it's an ID card, but it shows their, oh gosh,
Like tribal affiliation?
Yeah, but they have a blood something. And I cannot think of this. Hold on, let me tell you what this is.
It's a blood crest.
No.
No, I think Eric.
For Native Americans?
Yeah.
Blood eagle?
Yeah, I'm Native American.
What is it? What's the? You said a blood crest? There's like something that measures the amount or the percentage they are of that tribe.
Yeah, and it stands for life. They can't sell it off or anything like that.
So do you know about the 184? What is it, Sam? HUD 184, or what do you call it?
It's HUD 184.
Section 184 Indian Housing Loan Guarantee Program.
Do you know about that, Eric?
Because I don't use it. I'm sure I could find out about it because I have family that uses it.
I guess I start looking into, obviously that's not an option. When we have a listing coming up and we're exploring like what different financing types is this eligible for, right? I check, is it in USDA area? So I could check that if that's applicable.
I don't think as a broker I would advise it very smart for you to publicize 184.
Okay.
Taking a listing that is actually on soil.
Yeah.
Well, they don't have to be on like res land, right?
I know, but like it can be considered steering.
I don't think it's even an option in there. I think it would just fall under probably what, FHA?
Yeah. Oh yeah.
Yeah. Yep.
Yeah, I'm just curious. This is like a whole new, two new things in the last week that I've heard about that I was like, I've never heard of that before.
You know, there's definitely there's a lot of different unique and nuanced loan products. I think the important thing is partnering up with a lender who knows kind
Yeah.
of all the different options out there. Because it's really easy to what happens like 9 times out of 10 is loan officers will try and find the most vanilla product that they can get really comfortable with, so they can sound like an expert in that one field. And I think it's important to not to be an expert at finding answers, not necessarily an expert at memorizing facts. So, and a lot
Blood
of
quantum. That's what you're looking for.
What is it?
Blood quantum.
there we go. Thank you. Do you say blood crest, Eric?
Yeah, probably.
That's why I laughed. I was like, I don't think that's it. It's a blood quantum card. Thank you.
I'm gonna tell you, I'm offended that you said even if they look like Dan. I am
Not.
I just need to jump off the call, man.
Yeah, I
I'm
know.
done for today.
You said blood crest. My head said blood eagle. If you know what that is, then you know where I'm from. So
Blood quantum card. That's what we're looking for.
Vikings.
Yeah.
it's funny, as my wife is Native American bloodline, and here I am, the glowing ginger on the couch. Oh, look at me. I'm 98.5% Northern European.
Sam, for the thing like the all-in-one loan thing, is that when it comes to closing for those folks, it's any other new loan type just pays that off and stuff, like you would any other transaction, right?
Yeah. I mean, it's essentially a first lien position HELOC. So it just gets paid off like a normal loan.
I think they call that velocity banking in some YouTube worlds.
They're really popular in Europe, like extremely popular in Europe. They're just
Why?
There's probably a clever answer to that. I don't know what the answer is, but they are very popular in Europe.
Okay, I have another question unless someone else does. Okay, cool.
Is there anyone on the call? I mean, it's been super quiet. I think it's just you, Sam, and Eric and I.
Christy chimed in. Trey's been chatting. So
I'm listening. I like her questions.
So I have another client that's looking at, they have 2 properties, both with their VA loan. They have remaining entitlement. It would get them like a $250,000 townhouse. Okay. If they wanted to go 0 down and just like max out everything that they're entitled to. One of their properties, so the first 2 are now rental properties. One of the properties has an interest rate of like 2.25. It's fantastic, but it does also have a HELOC on it that's at like a 9%. And the person's like, oh, if I could pay off that HELOC because that thing's killing me, had it for a couple years and it's still at like the original balance, right? How would is that something that you would look at? Because of course they're like, I don't want to refinance. I don't want to let go of that 2.25. But on the other hand, I'm like, but you've got a HELOC at freaking 9%, bro. Like maybe it makes sense with how long you've had it and how little the loan balance is on the rest of the house to refinance it and get rid of the HELOC.
Yeah. So you said they have 2 different houses?
Yeah.
Okay. So this is where blended rate comes in, and it's a super fun conversation. What's the balance of the 2% loan, do you think?
Well, so both houses that they have, one's at 2.25%, the other's at 2.75. The one that has the HELOC, is that the one you mean with the 2.25?
Yeah.
Loan balance is at 170.
Okay.
And HELOC's at like 60,000.
And that one's at 9%.
Yeah.
Okay. Okay. So let me see if I can figure this out really quick. Basically, you would blend the rates. You figure out you have a balance of 170 at 2.25, and then a balance at 60 at 9%. So you kind of have to figure out what your blended rate is for both of those. And if we look at this, you're going to be. Oh, hold on, that did not work. If I had to guess, the blended rate's like in the mid to high fives. So can you refinance the first lien and still accomplish a mid to high fives? Probably right now with some buy down. Rates went up this last week because of what's going on. But that's something that I do on a daily basis is people that have bought a house or refinanced, during 2020 and 2021 have these super low rates, and they usually have a ton of debt in credit cards and auto loans and whatnot. And they're like, I don't ever want to touch my 2% rate, but they're, they have $60,000, $70,000 in credit card debt at 30%. 9 times out of 10, it makes more sense to refinance at a lower combined rate than to keep the blended rate where it's at. Just if you have to kind of pencil it out for them and show them, but I would venture to say, that's basically half of what their loan balance is, a little bit more than half of what their loan balance is at the 2.25% at 9. Their blended rate is probably going to be in the mid to high fives.
Because that's the conversation. And this is where my curiosity came in is, does it make sense to refinance that one to get that HELOC gone? Would that possibly open up any more cash flow for them on that property? And then it would reinstate that amount of eligibility. So then they can go get something bigger for the third option.
Yeah.
With the VA loan.
The 2.25 is VA.
Yeah, both of the houses are VA.
Okay.
So if you refinance it could you I guess, what are the options for refinancing on that? If you wanted to release entitlement back.
Conventional.
Yeah, but would you have to then go put 20% down, or does the equity that's in the house count for that?
Yeah.
Yeah, the equity would. Hold on 1 second. I think this is my dump truck driver.
It's fine. I got to kick you out of here anyways. So.
No. Okay.
See, this is what happens. We have good conversations and we just keep going.
I'm going to call Sam on this one because this is like a real thing. This is how you help veterans build wealth through real estate.
All right. Take the call on your
it's like
on your blog and put the recap in the chat.
Yeah. Okay. Cool beans.
See you in a minute.
Sound good?
Yeah.
We'll see you guys tonight.
Chris.
Hey guys.
See you guys tonight. Better see everybody tonight.
See you tonight.
Bye.
I'll see you guys at the gala tonight. The rest of you have a fantastic day. Oh, people got off before the